Once again, welcome. Last time we talked about trading account. Yeah, and we saw we can get gross profit out of trading account. Trading account focuses on getting gross profit or gross loss. But today, we want to know income statement or trading profit and loss account. When you talk about income statements, combines two accounts. It combines trading account and also combines and profit and loss account. Yeah, when you talk about income statement, its definition here, they have said it is a financial statement. Yes, when you talk about income statement, they have said it is a financial statement that calculates a business revenue and expenses over a specific period of time. Of course, when you talk about income statement or trading profit and loss account, this one, its main purpose, it is you to get a net profit or a net loss. After getting your revenue, subtract the process of purchasing or process of production, then you subtract those expenses, the expenses you incur while doing the whole process of trading. So now, after knowing the reason why we prepare income statement is to get net profit now or net loss, let us look at it. When we go here, they have said income statement, it is divided into two sections, like the way I've told you at first. When you talk about income statement, it combines two accounts. Trading account, the one we prepare to get net gross profit or gross loss. Of course, when you talk about trading account, for it is used to get gross profit or gross loss. After getting net revenue, you subtract that process of all goods available for that process of production or that process of purchasing. Then we have also profit and loss account. This one we have not seen about it. Yeah, last time we talked about trading account and we saw how we calculated it, how we can get gross profit or gross loss. Now we are going to add profit and loss account and see how to get net profit or net loss. You remember we are still under financial statements. Like the way we said, we want to start from the bottom, where you can know income statement is got like this, trading profit and loss account like this, balance sheet, financial position, preparation, until we reach at preparation of financial statement. That is our aim. We want like all people to benefit, whether you are an institution, whether you are doing CPO, whether you are at campus, whether you are a person who is not studying. You may find that the person is having a business and want to know these things. So we want every person to benefit or every person to know how to handle the things. Now, let's go to our illustration. We are going to see illustration of income statement. We want to see how we can elaborate or how we can get our income statement. Like as it will say, first you come and mention. You come at first you mention heading. It's always in 3 lines. Even though I put in 1 line, but yes, X Limited income statement, or they can say income statement or trading profit and loss account. It is the same. You first check what is required for the period ended 31st December 2025. Yes. So you want to know how does the income statement look like. As I have told you, we have said income statement combines trading account. Now let us first see how trading account is done. Remember last time we talked about trading account, so we are not going to focus on it a lot. So Like last time we said, trading account you get its purpose is get gross profit or gross loss. And when you check here, we said first get your revenue or the amount or revenue collected from goods sold. Then you list sales returns or return in words. After selling your products, maybe customers not liked it, maybe they got damaged, and the person has returned. So when you get what you sold, you less what they returned, you get net sales. Now we continue. We got cost of sales. Here we are following the other formulas where we said net sales, you less cost of sales, you get gross profit. But we want to know what is under gross cost of sales. Remember these things, we talked about them in the previous video when you check in the trading account. Under cost of sales, we said we get opening stock, add total purchases. But to get total purchases, you get net purchases, you get purchases, a goods you have bought like to resell. Sometimes if it is a manufactured good, just say production, say goods produced. Then here you add carriage on purchases. That cost that is involved while you are bringing goods to your business. You add on them. And everything added on purchase. It can be insurance on purchase, can be cash on purchase. Everything on purchase you add it here. Get total purchases. Then you less returns. Of course, you as a business, you can buy goods, but you find damaged ones, find wrong quantity, you take it back. That means you subtract or to reduce the value of your purchases. Then when you get to purchases, yes, returns for purchase returns or return outwards. Come and get net purchases. When you get net purchases, you get your opening stock. This one, you less net purchases to get goods available for sale. When you get opening stock, the stock from previous period, you add what you have bought or purchases, the total purchases. After adding carriage on purchases, after adding insurance on purchases, you come and get goods available for sale. Of course, during that period, you will not sell all goods. You will sell some and others will remain the business. So we are going to first suggest closing stock, the one we have remained in the business. The one which is left, the one we are going to start with the next trading period. So we shall come and get our cost of sales. After getting goods, after getting opening stock, you add net purchases, and you less closing stock to get cost of sales. Remember, when you check in the formula where we were stating, we said net sales, this one, when you less cost of sales, this one, you get gross profit or loss. So that is our trading account. Now we want to add profit and loss account to make it trading profit and loss account or income statement. So after getting gross profit or after calculating trading account, we shall come and add incomes. We will add incomes. Under incomes, maybe we have rent received. Rent received. We have rent received. Of course, when you talk about rent received, you may find that someone is having houses and is having tenants and they are giving him money. In short, income. It is a money received out of the business which is not connected with your sales. Then we also have and be having commission received, can be having and be having grant received. Everything received, as long as it is not connected to what you are selling in your business, you record it here. And then when you get your gross profit or gross loss, you add your incomes. You get gross, you get your total loss. You get your total profit or total loss. Come here and get total loss or total profit. Yeah, you get total loss or total profits. It depends. Then after getting that one, we shall come and less. We shall less operating expenses. When you reach in preparations, they tell you to group them. And even here, even though we are still under preparation, not presenting, also we are going to group them. As long as you know expense is something that you spend on while doing business, not purchasing while doing business. And we are going to group them, starting with, let us start with administrative expenses. When you talk about administrative expense, these are expenses that incur in a business, within a business, not outside, not in the field, not in what. For it, you handle it while in your office, on your business premises. One, we have salaries and wages. Of course, when you talk about when you pay your worker, when you do what, that one is under your admin. You shall come here and add. Second, we have can be rent, can pay office expenses. It can be office expenses where you have stationery, you can have what, everything that is under. We also have electricity. When you buy your electricity, it is called under administrative. Have depreciation. But sometimes they specify, they say maybe some depreciation, it is under distribution or sales and what. So it depends. But that one is common under preparation and presentation. Those are some of administrative expenses, the expense that you do while doing business, the one you pay in business premises, not going outside or what. Then we have, after administrative, we have distribution. These are expenses that incur into field. You are doing businesses, you are transporting goods to customers. Those expenses, we will code them here. And one, we can say transport on sales. When you provide after sales service, we record it under distribution expenses. We have marketing. How marketing costs. The costs you incur while marketing your product. We have advertising. Of course, advertising, it is still under marketing. We have discount allowed. Maybe you tell your customer that when you buy a lot of things or when you buy some goods, yeah, I will give you. If you buy cash, yeah, I'll reduce score. Yeah, those are discount allowed. Hey, you allow your customers if they buy a lot of things, you give them discount. So here we shall have our total. Here we shall have our total administrative expenses. Even here we shall have our total distribution expenses. Now we also have other, or you can call financial expenses. Yeah, these things, when you talk about financial expenses, these are things that involve money. For it, it's not connected to distribution, it's not connected to admin. The things that you pay, money. One, we have taxation. When you pay taxation, we have interest paid. When you pay interest, code it here. We have dividends. Dividends paid. They're also recorded under financial expenses. As well as to involve money from business and they are not connected with physical things. So here we also come and we record our expenses, our financial expenses. We shall get our total financial expenses. So when you come here, when you get your administrative expenses, these ones, plus distribution expenses, plus other expenses or financial expenses, we come and get total operating expenses, the expenses that you incurred while operating your business. So you come and record them here. We have our total operating expenses after getting administrative expenses plus distribution expenses plus other expenses. We've got our total operating expenses. We've got our total operating expenses. And remember, we have said net loss. When you get your total loss or gross profit, if you don't have incomes, if you don't have incomes, you'll be having gross loss or profit. But when you have incomes, you have a total loss or total profit, which is this one. When we get our total loss or total profit, we less our operating expenses, we shall come here and get net profit or net loss. When you get a negative, it is net loss. When you get a positive, it is a net profit. It's a net profit. So we shall come here and get our net profit or net loss. So that is our illustration for income statement. Well, I'll say the first get sales. Well, we have said you get sales, you less cost of sales to get gross profit or gross loss. Add incomes to get total loss. If it is a negative, it's a total loss. If it is a positive, it's a total profit. Then you less expenses, the costs you incur while doing business. You total them, you come and get your net profit or our net loss. Now, after getting net profit or net loss, you come and prepare financial position or balance sheet. So I'm going to come here and say XY balance sheet as at 31st December 2025. Yeah, if they ask you balance sheet, say balance sheet. If they say financial position, you say financial position. It is the same. When you talk about financial position or balance sheet for it, its total assets must be equal to total equity and liabilities. In short, total balance. Yeah, here under balance sheet, our total assets must be equal to our total equity and total liabilities. Of course, when you check in our previous video and before doing accounting equation, we talked about components of balance sheet and we listed them and they are well explained. When you go there, you understand. Just here we are going to make illustration. Then we move on because we don't need to explain them again. When you check, get all information. So let us see some illustration. Remember, we have already talked about heading. It is XT balance sheet as at 31st December 2025. But I've said, let me first put this to show you that total assets equal total equity and total liabilities. When you find that assets are equal to that, it means your balance sheet has balanced, your things are correct. Now let us look at our illustration. As usual, here we have our details. Here we have amount or shillings. Here we have our amount. If they give you shillings, you put in bracket shillings. If they give you zeros, you put zeros. If they give you dollar, you put dollar. But here we want to see how it looks like. Then we come here. When you talk about assets, let us, our first item under balance sheet, it is assets. When you talk about assets, our first item will say it is assets. Under assets, we have non-current. When you talk about non-current assets, these are assets that take long, almost more than a year. For you, you have your motor vehicle, every day it gives you income. You receive money from it for more than a year. So under here, of course, when you talk about non-current assets, the first item we have non-current assets at cost. Then you have accumulated depreciation. Some assets depreciate like motor vehicle or fixed and fitting. Then here we have our net book value. That one we shall see when we reach most especially under presentation and preparation. Oh, when we do things that have additional information and yeah, adjustments, we shall say it is 100. But right now, that's considered as if our things they are at coastal, they are at net book value. The first non-current assets, we always have land. Shall come here and record land. Second, when you talk about land, of course, for it, it appreciates. That's why we don't consider it under appreciation. Second, we have investment. Maybe someone is having another business. Hey, now and record it here. Every time person receives money from that business, every time a person receives that money from that business. Then second, we have a third, maybe we have furniture and fittings. Furniture and fittings. We have machinery. A thing that you have that take more than a year. We have buildings. Maybe you didn't have your tenants. You have what the building you are working in. Yeah, we put them here. So after you come and get your total, assets. Total. Here you come and get total non-current assets. Non-current assets. They are here. Come and get them. After adding land, after adding investment, after adding furniture, maybe if you also have your goodwill, you add it here. Yes. Then after getting non-current assets, the assets that take more than here, you come and get your current. Assets. Of course, when you talk about current assets, these are assets that takes more than here. For it, anytime you receive money, you wake up, open your business. When you open your business, customers are going to come. You have your items there, you have your closings, you have stock, you have inventory. Anytime people will come and buy inventory. So under current assets, we have our inventory or stock. When you see inventory or stock, just know you are under. In short, these are the things that gives you money anytime or daily. If you want to take money, you just go and get from there. Then we have debtors. The people that took goods but have not yet paid them. So anytime you get money from them, they are called debtors or trade receivables. Anytime you can receive money, if they come and pay, you will get money. Then you have cash at hand. I've told you when you check in our previous video before doing accounting equation, all these items are well explained. Here we have bank. You can be having your cash at bank. You have prepaid incomes. Prepaid expenses. Where we say these are expenses. Yeah, these are expenses that you paid in advance. You paid more money. The one you have not used. You paid rent maybe for 2 years, but you have used 1 year. That means that one is recorded under current assets, because anytime maybe if you close your business, It's very easy for your landlord to return that money, and it will be income. It will be coded under current asset because anytime you can get it. Ah. Then we have accrued incomes. Accrued income. These are incomes that you expect to receive. Hey, you did your work, but they have not paid you. Or someone promised you rent. You have your tenant said is going to pay you. So anytime you are expecting to receive that income, you come and record it under current assets. And other things, when you talk about current assets, as long as you know it is you are going to receive money or you are going to receive income anytime, but from within and from business, you got it under current asset. That's why they say it is assets for under a year. It does not exceed a year. So after doing all those things, you come and add. You will add them. Here you come and get your total current assets. Yes. Here we come and get our total current assets. Our total current assets. They are here. Come and record them here. Total current assets. Now, when you get non-current assets, you add our current assets. You come here and get total assets. Here you come and get our total assets. Also, I've said to get total assets, you get non-current assets. You add current assets to get our total assets. And remember, we have said when you come and check on our statement here, we have said for you to get a correct balance sheet or financial position, your total assets must be equal to total equity and total liabilities. But now we have got our total assets. Now let us see how we can get our owner's equity or total equity. So now here we are going to have our owner's equity. The thing I have not mentioned on bank, this bank, the one we record under current assets, we have said anytime you'll be receiving money, you can go to bank and withdraw. But sometimes you may find that you have withdrawn your money in bank and the one which is there is less. That one we consider it at bank overdraft. When you find bank on credit side, just know that one is an overdraft. You need to pay that money, so that one is recorded under current liabilities. But when it is bank on debt side, that one you have your command on bank. It is coded under current assets here. Now let us look at owner's equity. I have told you we looked at these things some time back when you check in our videos. So here under we have our share capital, here we are under owner's equity. We have our retained earnings, also retained earnings. This is the money you put aside to cater for business anytime or anything. If you find that you have no money, sometimes you may find retained earnings. on debt side. When you find a balance on debt side, that means they are demanding the business. That one you will subtract it. You don't have it, you subtract from owner's equity or from share capital. But if you find it is on credit side, that one you will add it. So you always check on trial balance. So we have share premium, we have net profit or net loss, or net loss. The value we get after calculating income statement, that net profit or net loss, to the one you come and put it here. So here we have, come and record this figure. I know someone is going to come and ask, is it a must to record them in the middle of the lines or what? No, it's not a must. Sometimes you may do in 2 columns, as we are going to be seeing them in coming examples. But all you need like to be organized. When you say owner's equity, they should be like in the same line, or they should be seeable. In short, should be very smart in what you are doing. So after doing all those things, you come and get a total owner's equity. Get your total owner's equity. Then after you come on liabilities. Of course, when you talk about liabilities, these are things that you have used but you have not paid them. It can be a bank loan. When you talk about a bank loan or a bond, you borrowed something and you need to pay. And when you talk about bank loan, sometimes it can be for more than a year. Borrowed money to be paid in 2 years, 3 years, 5 years. That one is coded under non-current liabilities. It's the obligation to pay. You took something from someone, you must pay. You need to pay it. So when you talk about non-current liabilities, we have, as I've talked about, we have bank loan or long-term. We have long-term borrowing. You got some loan which takes 2 years, 4 years, 5 years. With time you will pay. This one takes more than a year. Then you have bonds. You borrowed from bond. With time you will pay. You have debentures. So those are some of our liabilities. But it's always good to put them like in a side which is not under like owner's equity, so that when you add, even you can add under like the same column, no problem, as long as you add them to get correct thing, to get a correct answer. So after you will get your total non-current liabilities, total non-current liabilities. Come and get them here. So after you come and get current, of course, when you talk about current liabilities, these are things that you used but you have not paid it. So anytime you are going to pay, one of them is trade. We have creditors. You bought goods on credit. That means anytime you pay, you pay in the end of the year. They are also called trade payable. You bought goods on credit but you have not yet paid. So that means anytime we'll pay. Then we have short-term borrowing. Borrow the money for less than a year. That means anytime we'll pay. We have bank overdraft. I've told you, for bank overdraft comes when you don't have enough money in your bank account. The bank is demanding you. Then you have prepaid. Paid incomes. You received a lot of income. You received income for maybe you received income for 2026, yet you are preparing for 2025. That means you have received that income but you have not provided the services. So anytime you go and provide those services. Then you have accrued expenses. When you talk about accrued expenses, you have used the rent or something or any expenses. It means insurance. You have used insurance for 2026, but yes, you paid insurance for 2026, but you have not. When you talk about accrued expenses, when you check in our last videos, we said accrued expenses, this one they incur when you have provided services but they have not paid you. You have used the services but you have not paid those services. So anytime you will pay those services, for example, you have used the rent for 2025 or 2024 but you have not paid that rent, it is under recorded current liability. That means anytime we will pay. So of course, those are some of short-term or current liabilities. Add and get your total. Get here, you come and get your total current. Come and get your total current liabilities. Come and get them here. Yeah, so these are our total current liabilities. Now let us get our total liabilities. And remember, to get total liabilities, you come here and get total non-current liabilities. These ones you add current liabilities to get our total liabilities. Here you will get our total liabilities. And remember, we have said here from the start, we have said our total assets is equal to total equity and total liabilities. And remember, we have our total assets, they are here. So here we are going to get, remember, we have our total equity and total liabilities. So here we are going to get our total liabilities, total owners equity, we shall come here and get our owners equity, total owners equity. We add total liabilities to get, shall get, so total liabilities and total owners equity. That means if we get our total liabilities and total owners equity, which is the same as total liabilities, this one total assets, it means we have got our balance sheet balanced. So those are our illustrations. The first one we have said, we have looked at illustration of income statement or trading and profit and loss account. This one, where we have said this one, our income, and this one we have said helps us to get net profit or net loss. Then we have looked at balance sheet, where we have said balance sheet helps us to look at or to get our total assets is equal to total equity and liabilities are the same. When you find that your total assets, this one, is equal to owner's equity plus liabilities, it means your balance sheet is balanced. So that is for now. Next time we are going to look at illustration. The first one to be without additional information. We shall see how we handle such. So we meet next time.